Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, where is Larry as Google continues to be hammered by conservatives over alleged bias? Why is the company's founder not out front defending his creation? Plus, Starbucks is going greener. It's already called the last straw for 2020. Now it's pushing into renewable energy. We will hear from CEO Kevin Johnson. And driving towards an IPO, Uber CEO Dara Khosrowshahi speaks to Bloomberg Television about the company's progress towards going public. But first, to our top story. It was a curious sight at last Wednesday's Senate hearing on Russian election meddling. Facebook COO Sheryl Sandberg and Twitter CEO Jack Dorsey sat next to an empty seat. Who was supposed to be there? Well, the committee wanted Google co-founder Larry Page, who turned them down. That didn't sit well with Virginia Senator Mark Warner.
I'd say, though, I'm deeply disappointed that Google, one of the most influential digital platforms in the world, chose not to send its own top corporate leadership to engage this committee. Because I know our members have a series of difficult questions about structural vulnerabilities on a number of Google's platforms that we need answers for.
And at a time when Google is getting hammered by conservatives for allegedly being biased against them, it makes you wonder, why is someone like Larry Page not out there defending his creation like, say, Mark Zuckerberg or Jack Dorsey might have done? That is, in fact, the very question posed by this week's cover story in Bloomberg Business Week. Just where in the world is Larry Page? To answer that, I want to bring in one of the story's authors, Austin Carr, who worked alongside our resident Google watcher, Mark Bergen. And in studio with me here, I've got Bloomberg Tech Selena Wang, who covers Twitter and was at those hearings. So, Austin, look, Larry Page has never loved public speaking. I believe his last public interview was 3 years ago. He does have some problems, some health problems right now that have to do with his voice. But in general, what is the view on why he did not show up?
Well, it really depends on who you ask, Emily. If you talk to Google, essentially they say that they offered their head of public affairs, Kent Walker, to go, but that obviously wasn't good enough for the Senate. As you noted, Larry Page has been reclusive over the years, but the question is why he didn't appear at this very crucial time in the company's history. And there's speculation out there that it may have been a strategy that the more they weren't present at the hearing, the more the focus might have been on Facebook or Twitter. Sheryl Sandberg being present as well as Jack Dorsey. Obviously, that has backfired.
Well, Roger McNamee, longtime tech investor who's been railing on Facebook in particular, makes the point in your piece, Austin, that Google has benefited from Facebook being the focus over the last few months, but may have done Facebook a huge favor by not being there, and lawmakers' attention has now turned to Google. Selena, what harm did Larry Page do by not showing up?
They totally made a calculated risk, thinking that they want to continue to stay out of this toxicity and election interference on social media that Google probably feels is mostly relegated to Twitter and Facebook's universe of problems. However, by not being there, they opened themselves up to endless criticism. You heard Mark Warner up there criticizing Google. Larry Page was even being called unpatriotic. They criticized them for what they're trying to accomplish in China. They didn't get to have a chance to go up there and stand up and explain what they've been doing to combat Russian interference. And I also think it's worth pointing out that Facebook and Twitter won a lot of goodwill with lawmakers by really just repeating what they've been saying over and over again for the past several months. So Google really didn't have a lot to lose by attending, but they did lose a lot by not being there.
Now, Austin, I know a lot of investigation has gone into this story, and one of the big questions is, what has Larry Page been up to? I mean, he recently became CEO of Alphabet. Sundar Pichai became CEO of Google in particular. But, in the meantime, where is Larry Page?
I think that's a fantastic question. It's very much the subject of the article. And my colleague and I, Mark Bergen, has spent months sort of thinking about this topic. And the truth is, internally at Alphabet and Google, a lot of people say he's more withdrawn than ever, taking on more of an emeritus role almost. He's obviously not the CEO of Google, so he doesn't have to deal with the day-to-day on those issues. But he's definitely more drawn to some of the technical focus, some of the sci-fi projects going going on at things like X, the research lab under Alphabet. But the larger question here is whether that sort of technical focus should take priority when there's a lot more pressing societal challenges that are going on today. And perhaps he should probably reorient himself around those more pressing challenges.
Meantime, Selena, you have Mark Zuckerberg, Jack Dorsey, even Jeff Bezos out front a lot. Lately, he's tweeting, he's taking on President Trump. Google very much is sort of missing that public face. Eric Schmidt used to do that, but now he's less involved. Sundar Pichai, the CEO of Google, could have also taken the Senate up on this invitation. So how exposed is Google, given that they don't have someone who's really willing to represent them in public, who is of the stature that lawmakers would like to see?
Right. We're in a different era where these tech company CEOs can't just stay behind their data-centric personalities, introverted personalities, something that Jack Dorsey has very much stood behind for many years. And I think this past year we've seen the executives of these large tech companies really step up because they understand that lawmakers want to see the top decision makers there at the table. And I think at the Senate hearings, it was very interesting to see how Jack Dorsey performed. He was very introspective. Lawmakers really appreciated that over Sandberg's very prepared and sort of memorized comments. And yes, they are a smaller company. They can be a lot more flexible in a way, but he did make some very strong commitments that they're actually going to refocus the entire organization on solving these security and election interference issues. Now, on the other hand, you have Sheryl Sandberg and Zuckerberg, who really continue to reiterate their statements that they're just hiring more and more people, but they aren't hearing true fundamental commitments from that company and how they're going to actually change their underlying business models. And I'm sure if Google had sent a representative there as well, it would have been a sort of same line that Sandberg and Zuckerberg have taken.
Now, Austin, there are some fun details in your story about the fun things that Larry Page is working on. And, you know, one of my favorite lines is this guy who likes self-driving cars and flying cars and yet couldn't make it to Washington. But talk to us about some of his side projects, something called Heliox.
Sure. I mean, I promise you it's a lot more fun than what's going on in D.C. Heliox is basically a project that started a couple years ago, and the only way to describe it is almost a hyperloop for bicycles. It's sort of this large plastic tube that they set up in a former NASA sort of hangar in the Bay Area that was designed to pump air into to propel bicyclists forward at rapid speeds. And they actually envisioned building this thing, connecting it from their Mountain View campus all the way to San Francisco, which is kind of a crazy notion. But those are the types of things that are really captivating Larry Page's attention, as opposed to, some of these more societal challenges that we've been talking about.
Meantime, Google is now in the eye of the president's tweets, Selena, and you've got the president directly attacking this company. You've got video that's been leaked of Sergey Brin, the other co-founder of Google, talking at an all-hands meeting about how he found it deeply offensive that Trump was elected. And it doesn't help Google's argument when they're trying to say we're unbiased, and yet you have conservative lawmakers saying, how can your personal opinions and your personal politics possibly not affect this company? I mean, Google is sending their chief privacy officer, by the way, Keith Enright, to testify before the Senate on the 26th of September. But how does Google emerge from this unscathed?
Well, it's become a very popular line of Republican lawmakers to continuously berate these tech companies for having anti-conservative filtering policies, content moderation policies. And yes, Google has really been singled out by the president in his tweets, saying that they are unfairly biasing the news about him to all be negative in terms of coverage. But at the end of the day, regulators don't really have a lot of room to actually regulate these companies in terms of their filtering and content moderation policies. They are protected by the First Amendment. So there has been a lot of talk, but there really isn't any looming regulation when it comes to the type of content they're able to show.
Meantime, Senator Mark Warner just said at an Atlantic conference in respect to technology companies, I think there is a high chance people realize that the days of the wild, wild west are over and that there need to be some guardrails, hinting at regulation there. But as we've discussed, it could take many, many years, perhaps, to get regulation in place, if indeed that happens. Meantime, Europe also looking hard at U.S. technology companies. The European Parliament just recently voted to back up copyright rules that basically help the creators of video, music, and other rights holders on the web. What does this mean, Selena?
So Mark Warner has brought up many different policy ideas, and you're right in that it'll probably take several years before any of these come to fruition. I think some of the most pertinent ones that could be more easily implemented is, for instance, a bot labeling tool, which I've heard from sources that Twitter has been toying around about doing for several years. So that is a more immediate possibility. And when it comes to the EU, they have been much more forthcoming, and they've really been at the forefront of regulating these tech giants. And this newest vote is pretty momentous. It would really be holding these tech platforms responsible for copyright infringement. And the EU lawmakers argue that it's a way to help these music artists, newsmakers, creators that have really been slammed by the rise of these platforms that essentially can distribute it for free. But on the other hand, if this does actually go into effect, it would be a huge burden on these tech companies to come up with algorithms to figure out what type of content actually has the correct licenses. And some critics have argued that it could hurt small tech companies even more because they may not have the ability to be able to properly filter that content.
All right, Selena Wang, Bloomberg Technology, Austin Carr for us in New York. Check out Austin's Business Week piece with Mark Bergen in this week's issue. Up next, Starbucks is looking to live up to the color of its logo with a new green push, committing to 10,000 greener stores by 2025. My conversation with CEO Kevin Johnson just ahead. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Starbucks is making a push to save the environment, unveiling a commitment to 10,000 greener stores in coming years. The company will use more renewable energy to power its stores, among other things. I spoke exclusively with Starbucks CEO Kevin Johnson at the Global Climate Action Summit right here in San Francisco with a wide-ranging discussion about the business, and started with the coffee chain's push to reduce its environmental impact and the way it works and the waste it generates.
Emily, first of all, sustainability has been a pillar of Starbucks' social impact agenda for years, starting with sustainability of coffee and making it the first sustainable agricultural product, to greener cups, to LEED certified stores. And so today we're announcing a new greener store framework where we're going beyond the store design into how we operate the store. So it has to do with renewable energy, buying renewable energy credits so that all energy in Starbucks stores is driven renewable. It's about water stewardship and ensuring we're being thoughtful about water and water waste. It's about managing waste. And so we have a complete program that we've put together with our partners that we're announcing today that will help make us a greener, more sustainable company.
Will you install solar on the stores?
No, what we do is we buy renewable energy credits that basically ensure that we are funding and supporting the growth of renewable energy sources to fund the energy consumed in our stores. But we do work to ensure that all the equipment in our stores consumes is the minimal amount of power necessary, and that's why we embrace sort of LEED certified store concepts. And so a lot of innovation in the store, and then a lot of commitment to things like renewable energy and water and waste reduction as we operate the store.
Now, you get a lot of feedback from coffee farmers around the world. By one estimate, by 2025, we're going to lose half the world's area deemed suitable for growing coffee. What are farmers telling you about how climate change is affecting them, and how do you see the global coffee crop evolving over time, with a sustainable future?
Well, we source coffee from over 300,000 different coffee farms around the world. Mm-hmm. And so we have farmer support centers in every geography that we source coffee from, and we have agronomists that work on innovation to really address some of these challenges. But what we're hearing from farmers is with global warming, it has created the manifestation of coffee rust, a disease that gets on the leaves of coffee trees and kills them. And so our agronomists have worked to create a hybrid rust-resistant coffee tree that we give to coffee farmers. And then we work with coffee farmers to develop the best practices on how to get the best quality of coffee and the best yield from their coffee. And we do that from farmer support centers, and we basically open source all of that information with coffee farmers around the world.
Given the commitment that you have to staving off climate change, what's been your reaction to the administration's actions? I mean, even just this week, the rollback on methane protections and going all the way back to pulling out of Paris?
Well, for us, sustainability has been a pillar of our social impact agenda for more than a decade, and really goes back to the sort of the origin and the foundation of the company, and our belief that the pursuit of profit is not in direct conflict with the pursuit of doing good. And in the case of sustainability, whether it's coffee, greener cups, greener stores, that's good for business. And so we stay focused on what Starbucks does and does well, which is let's create a great experience in our stores, and let's serve some of the world's best coffees from around the world.
2020 will be the year of the final straw. You have pledged to eliminate plastic straws, and I know that you've been planning for years to do so, but it has not been easy. What have been the biggest challenges of getting there, reaching that goal?
Well, this is really a challenge of innovation, and we do that by working not only within Starbucks, with many partners outside of Starbucks, to figure out how to innovate around things like the strawless lids that we have introduced here in the United States and are now being deployed around the world. In addition to the strawless lids, it's coming up with new designs of straws that are either compostable or biodegradable.
What are they going to be made of, and who will supply them?
Well, some are made from paper, and some are made of compostable plastics. And so there's innovators and supply chain that is being built to be able to supply the volume of straws that not only Starbucks customers use, but that are used in many other food and beverage establishments.
So some would say the straws are just a drop in the bucket in terms of the amount of plastic that is going into the ecosystem. What else can you do to push the needle?
Well, the other things we do is really work with local government to ensure they have recycling capabilities. And the more that we're focused on getting our recyclable cups and recyclable plastics into the appropriate recycling system in these local communities, we can make a big difference there as well. So you have to really focus this on a variety of domains, and that's what we're doing.
So, Starbucks CEO Kevin Johnson speaking at the Global Climate Summit in San Francisco. Coming up next, we continue our coverage from the summit. I will talk to the mayor of San Francisco about our city stance on protecting the environment and tech's role in it. This is Bloomberg. Now back to our coverage of the Global Climate Action Summit. With the conference taking place in San Francisco, who better to sit down with and see what the host city is doing to fight global warming than the 45th mayor of this city, who also happens to be the first African-American woman to hold the post, London Breed. Scientists warn even with the commitments of the Paris Accord, we may not be able to stall climate change. So I asked the mayor, what can San Francisco really do?
We are well on our way to 100% renewable energy by 2030. We're committed to that. We launched our Clean Power SF program with over 100,000 customers already enrolled in the program. And I'm excited about, just really getting to a place where we can produce zero waste and coming up with creative solutions like green bonds, which helps with our infrastructure. We have the technology to do amazing things, and we should use it. And just because someone says that it's not possible doesn't mean that we don't roll up our sleeves and do everything we can to try.
This is a low-lying city. What's the plan to fight the rising seas?
And so right now, I'm glad you asked that. We actually have an initiative on the ballot for our seawall. Our seawall, which is really protecting us from sea level rise. It's an over $1 billion project. We have a bond on the ballot where we're raising money so that people can understand that the things that we don't see are sometimes more important than the things that we do. This is the difference between protecting us when a big earthquake comes or anything else for that nature. So we are moving forward to provide protections to our seawall.
Were you disappointed in the president's decision, the stance, and pulling out of Paris?
Everyone, I think, who cares about the future of our planet had to be disappointed. But what that has done is inspired people from all over the world to come together for this Global Climate Action Summit to not just talk about what we want to do, but to actually put words into deeds and get things done.
What's the strategy for accelerating the use of electric cars in the city?
So we have basically provided additional stations for charging stations here in San Francisco. The new purchase of all of our vehicles are going to be clean energy vehicles. We put forth legislation a couple of years ago to make that commitment, because there are options out there that we can use to get to a 100% clean fleet here in San Francisco for all of our city vehicles, including our dump trucks, our police vehicles. All of those things, we're headed in the right direction.
Where is the city on the testing of self-driving cars?
So the testing of self-driving cars is a little complicated. We are trying to work with the industry on responsible practices. What we are most concerned about is safety. Mm-hmm. We want to make sure that, people don't get hurt. And so we're working with this industry to provide safe testing and regulations that are appropriate to keep people safe.
San Francisco just passed some surprisingly strict regulations on scooters, choosing 2 companies to give permits to. Is that just the way it is, or do you think these regulations could loosen in the future to allow other companies to participate?
I think what happened when the scooters just start showing up all over the sidewalks in San Francisco a couple months ago, people were like, well, what do we do with this? And so now, really trying to see whether or not this can be something that can work in San Francisco. I mean, frankly, I'm excited about the scooters, especially when you wear dresses. You can just hop on a scooter and go from one block to the next. But we also, again, safety is a #1 option. People are riding on sidewalks, narrow sidewalks where people are walking. That's really a problem. So I think our goal is to make sure that people are using them safely, that we test this to see how it works. But I think this could be a great addition to San Francisco.
There are some other policies that some in the tech community might view as tech unfriendly. The gross receipts tax, the proposed ban on office cafeterias. Are you taking on big business?
I think part of what I believe as mayor is that big business definitely has to pay their fair share in helping, San Francisco with all the challenges that exist. But I think there's a fine line between helping and being responsible and just overburdening the business community with things that drive them away. I want to make sure that our strong economy continues in San Francisco, so I want to make sure that we have balanced and fair regulations, and that definitely will take time.
Do you think the tech community needs to do more when it comes to the homelessness situation, when it comes to being a good city citizen, if you will?
So I think that we need more, of course. But the flip side of that is the people that we have who sadly are homeless on our streets are struggling with drug addiction and mental illness. We have gotten people into our navigation centers, which are 24-hour shelters that helps people into permanent supportive housing, and they have not always stayed in that housing. They would get in there one day, be gone the next, and it is continuing to be a challenge. It's why I'm pushing for some reforms to our mental health conservatorship system. It's also why I'm pushing for safe injection sites, things that are innovative that are going to hopefully get us to a better place. It's not going to completely solve the problem because we know people are struggling, but we have to do more and we have to do something different.
Our conversation with Mayor London Breed of San Francisco at the Global Climate Action Summit. Coming up, Uber CEO says investors want to see a path to profitability as the ride-hailer zooms down the road towards an IPO with some bumps along the way. Our conversation with CEO Dara Khosrowshahi is next. This is Bloomberg. I'm Emily Chang in San Francisco. Bloomberg has learned Chinese food delivery giant Meituan has raised $4.2 billion, pricing its Hong Kong IPO toward the top of the range. The stock is expected to start trading next week. Our Bloomberg Tech Deals reporter Alex Barinka joins us now from Boston. So, Alex, what do we know about Meituan's IPO so far?
So what we know is that they did raise above that $4 billion mark, and they've got some really key investors in there. Hong Kong's richest man, Lau Ka-shing, has personally put his money behind the stock, and you have some investors like Alipay, which are also agreeing to buy into the listing. But some of the key investors that you would hope to see for a Hong Kong listing are not necessarily as strong as hoped. Retail investors have not seen as much enthusiasm about this stock, and perhaps that's because a lot of the Chinese retail investors have gotten burned recently. You've seen a sell-off in these Chinese tech stocks over in Hong Kong. So that key piece of the market and some of the rationale of why these Asian companies choose to list in Hong Kong potentially missing from that $4 billion plus that Meituan raised.
Right. Why list in Hong Kong anyway when you have so many more Chinese companies listing in the United States?
It is an interesting one. They follow Xiaomi, who did choose to list in Hong Kong, and I think it is because of that retail piece. Meituan is the big food delivery giant. They know the investor group there, but to your point, you've seen more and more companies, 24 companies year to date, raise more than $7 billion in U.S. IPOs because, like my conversation with Neo, the China of Tesla, who listed in the U.S. this week, the CFO told me yesterday that they came to New York because New York has the broadest depth of investors, and they also have the comparable companies in Tesla trading here, so potentially investors can learn the story. Meituan seems to be going more of the route of Xiaomi, who thinks that staying in that home market, potentially just pitching to the home audience, which really understands the business, is definitely the way to go.
So, Alex, talk to us a little bit about what we can expect from the China IPO, especially the tech IPO pipeline, over the next year.
So you have a lot of these large Tencent-backed, Alibaba-backed companies. It's really become the age of these companies that have Tencent and Alibaba in their sights. 2014 was Alibaba's year to have that blockbuster IPO, but now in Asia you have these companies like Meituan. But also, interestingly, the pipeline does continue for those companies looking to list in New York. We have Viomi, which is a Tencent-backed internet-connected application maker, coming to, the Xiaomi-backed Tencent, Xiaomi-backed application maker coming to New York, and we're all waiting on that Tencent Music listing to potentially file for a U.S. IPO. So bottom line is, while the U.S. startups have been majorly absent from the listings market, the ones valued at more than $10 billion, a lot of these Asian companies seem to be taking advantage of getting out earlier. And, you see in the rounds, too, it's not that they don't have the money flowing into the system. These large companies are taking large stakes in the IPO. It just seems like they're taking advantage of taking public capital instead of waiting on the wings like Uber or Lyft or Airbnb has done.
All right, Bloomberg Tech's Alex Barinka for us in Boston today. Alex, thanks so much. Well, Uber is increasing its investment in driverless car research. The company has pledged more than $150 million over 5 years to open an engineering hub in Toronto in 2019 and expanding its advanced technology group, which is developing much of the company's autonomous vehicle technology. The investment is another vote of confidence in Toronto's tech scene, which is already home to one of Uber's AI teams. And Uber CEO said the company needs to show a path to profitability as the ride-sharing startup drives towards a public listing. Bloomberg BNN's Amanda Lang sat down with Dara Khosrowshahi and asked what to expect before Uber's IPO next year.
Yes, we are. 2019 is our target, the second half of 2019. We brought on a CFO, Nelson Chai, so it's important to have that spot filled. And at this point, it's all systems go.
What do you need to do? What do you need to show the street pre-IPO? Is it profit? Is it near profit?
I think we have to show a path to profitability. When you look at our business, there are many different segments. There's a ride segment, which is the most mature segment. And I think we'll be able to demonstrate within the rides business a path to profitability, continuing to increase our contribution margin. And then there are segments like Eats that are about hyper growth. Uber Eats is one of the fastest growing parts of our business, the largest food delivery player globally outside of China. And really that's about market expansion. And then we've got some very new parts of our business. If you look at the bikes business, the e-bikes, jump bikes, and scooters part of our business, or flying taxis, et cetera, these businesses are not going to be profitable for a long time, but hold incredible growth promise. And what we see in the marketplace is the market pays for growth.
And you are investing heavily in the new businesses you already have and also new businesses to come. How much more expansion is there for you?
Well, when you look at the transportation ecosystem, ultimately what we're going after is debundling car ownership. Right? I mean, the car is an incredible vehicle. People use it to go to school, to go to work, to get groceries, et cetera. And now in urban environments, we think that we can build out a host of services that essentially replace all of these various use cases of the car. This is ultimately a $6 trillion industry that we're going after. A lot of people talk about Uber being a big company, but we account for less than 1% of miles driven on the road. So our eyes are big, The target is big, and yes, it will take investment, but we think that we can also demonstrate progress in terms of profitability as we continue to make the investments in all these technologies, including self-driving.
Part of your existing model, it does deal with human drivers.
Very much so. Human drivers are a huge part of our business.
There is this growing push to force you to treat them less as contractors and more as employees. Does that upend your model if you have to treat them like employees?
Well, I think that the fact is that when I talk to our driver partners, I'm actually going to have a forum with our driver partners here in Toronto. The number one reason why they like Uber is that they can use our platform however they want to. You know, they can come on for 2 hours, get off some, if they want to. I had a driver who liked driving around with her daughter, but you can't do that at Uber, but she now does that with Eats because her daughter can go and kind of deliver the food and they get to spend time together. So we think that looks and feels like an independent contractor. So we think we're on the right side here, but obviously we've got to have discussions with local regulators, laws, et cetera. But ultimately we're building this service so that it's a service to be used by our driver partners any way that they want to, whether they want to do it full-time, part-time, or some way in between.
You are also doubling down on driverless technology with this investment here in Canada.
Yeah.
Why is that so important? Why does Uber need to own that technology rather than just use it to your advantage at some point?
I think we need to use it to our advantage. We don't necessarily need to own it, but in the early stages of developing this technology, we think there's a real advantage to developing it with in conjunction with a rides network, because we can actually develop the technology specifically for riding. It's not replacing the driver in every single circumstance. It's for a ride-sharing framework. And so in the early days, we're certainly going to develop in-house, but we'll look to partner. So for example, we announced a partnership with Toyota where they invested $500 million in our company, and we are now working on co-developing a purpose-built ride-sharing car, an electric car, that we're developing together going forward.
That comes with risks. We've seen some blips, safety issues, accidents.
Yes.
That associated with your brand. Is that a problem for you?
I think that this technology, because it works in the real world, absolutely comes with risk. And we are now undergoing a top-to-bottom audit of our practices, how we develop, how we test, how we simulate, how we test in a track, and ultimately how we test in the road to make sure that we are as safe as possible while developing this incredibly interesting technology.
You've been in the job about a year.
Yes,
and
a little over a year now.
A little over a year,
yeah.
And charged really with turning things around. Do you hope at some point that we stop calling it, you know, the troubled Uber, the controversial Uber? At what point do you put the past behind you?
I think we're at that point. You know, I think that the fact is that the management here who built this company, who founded this company, certainly made their mistakes, but they built a great company.
Uber CEO Dara Khosrowshahi with BNN Bloomberg's Amanda Lang. Coming up, the NASDAQ, the New York Stock Exchange, now IEX. We talked to IEX co-founder and CEO Brad Katsuyama of Flash Boys fame about scoring their first stock listing on their new stock exchange. And later in the show, we will head back to the Global Climate Action Summit to see how LA is faring in the fight against climate change. Our exclusive conversation with Mayor Eric Garcetti. This is Bloomberg. Jeff Bezos, the world's richest person, is launching a $2 billion fund to help the homeless. The Bezos Day One Fund will issue annual awards to organizations that are doing, quote, compassionate, needle-moving work to shelter and support the immediate needs of young families. The fund will also create a network of nonprofit preschools in low-income communities. Bezos is worth $164 billion and last year took to Twitter to solicit advice from the public on how he could best use his wealth to give immediate help to others. Well, move over NASDAQ and the New York Stock Exchange. There is a new player in town. The IEX Group has won its first listing with online brokerage Interactive Brokers, jumping ship for the new exchange that promises to even the playing field by placing a speed bump on trades. Joining us now, IEX President and CEO Brad Katsuyama, who was made famous by Michael Lewis's 2014 book, flash boys. So, Brad, IEX is in part a reaction to the rise of technology and high-frequency trading that has enabled super fast trading to be possible. What sets your exchange apart?
I mean, I think for us, IEX from the beginning has really been about serving investors and protecting their needs in this market. My background was a trader. I worked at a bank. Large mutual funds, pension funds were my clients. That represents the everyday investor. And what we found was that the stock exchanges, New York Stock Exchange, NASDAQ, being two of them, were selling high-speed data and technology advantages to a group of high-speed traders that essentially let them trade and pick off the everyday investor. And I think from our standpoint, it was about creating an exchange that leveled the playing field, that gave these investors a market that was actually protecting their interests instead of exploiting them.
What do you think the real problem is with using technology and high-frequency trading? I mean, it certainly gives some traders an edge.
Yeah, so I think it's a perfect question because there are good uses of technology in trading, and there are bad uses of technology in trading. And so from the good standpoint, you look at people using technology to make markets and provide liquidity, trading correlated products like an ETF versus the underlying stock. But on the other side of that, you have people using them for predatory tactics, trying to sniff out orders, trying to electronically front run them. And I think from our standpoint, where we decided to start IEX is the idea that the exchange itself, selling technology to certain players, really made the referee in this particular game very biased on the outcome. It's like the referee in a football game selling things to one of the teams and then claiming to be neutral about who wins or loses. And exchanges now make more money selling high-speed data and technology than they do from matching buyers and sellers. So in many ways, the exchanges have kind of lost their purpose. And really from an IEX standpoint, that's our competitive edge. We are aligned with investors, and now we're really happy that we can start to align with companies with the launch of our listings business.
That said, Interactive Brokers could be taking a bit of a hit to its price because on your exchange, it won't have as much exposure to other exchanges. How do you sell that to other companies? Well,
actually, Interactive Brokers, I think, outperformed, let's say, E-Trade by 2% today. So I think the market's responded well to the news. But what I would say is that stocks can trade on any exchange. So the role of the listing exchange is to open and close the stock, to surveil for manipulative activity in a stock, and I think IEX is much better aligned to perform those tasks than exchanges where their largest clients are some of the predatory high-speed trading firms. So from our standpoint, we see the value IEX adds is really about creating alignment between the exchanges, the investors, and companies, and really looking to make that process as simple and efficient as you can. And I think trying to dampen volatility by eliminating opportunities for high-speed traders to insert themselves. So, Interactive Brokers, I think, is a perfect example of a company that through its history has used technology to deliver benefits back to their clients. They invented smart order routing, which is now a commonplace technology in the market. They have used technology to make markets. So when we look at aligning with them, they are exactly the kind of firm that uses technology for productive means. And again, the market's responded well. And from our standpoint, it really is about just that alignment between investors, the exchange, and companies.
Okay, that said, why do you think it's been so hard to recruit other companies? I mean, clearly there is some skepticism out there.
Yeah, so for us, I mean, a lot of it's the regulatory process. It took us 2 years to get our exchange license. And again, the exchanges don't want anyone in this club, so they lobbied very aggressively against us. It took us another year after that approval, over a year actually, to get our listings license. So for IEX, this was kind of the first year we could launch this program. You look at 10 to 12 switches per year, so not a lot of companies are moving back and forth, and I think that speaks to the lack of competition, meaning, do you want to, New York Stock Exchange and NASDAQ look more similar now than they look different. So it was getting that regulatory approval despite heavy lobbying interest against us. And so from our standpoint, again, getting the first one was really important. And having it be a company like Interactive Brokers, a 20 billion plus market cap, and a very sophisticated player, I think sends a very strong message to people, other companies, whether you're inside or outside of finance, being able to follow the lead of someone who's sophisticated, who understands the markets. And when you look at their chairman, CEO, Thomas Petterfy, he's talking about this is good for our shareholders. And I think from our standpoint, that's exactly the same message that we've been talking about. So for us, it's really exciting, and I think definitely great momentum for us to launch this business with that kind of company.
So most listing swaps happen towards the end of the year before fees are due. Can we expect more this year, and who are you targeting?
Sure, yeah. So we've been having great kind of conversations across the board. The interest also has from new companies has spiked since the announcement. So from our standpoint, it's really focusing on Interactive Brokers. October 5th seems to be, or is expected to be, the date. I can't announce other companies, but the interest has been good, and we're really excited. So. I think this will be a great, finish to the year for us, for sure.
Brad Katsuyama, President and CEO of IEX Group. Thanks so much, Brad.
Thank you.
For stopping by. Coming up next, California's Assembly wants the state to be using 100% clean power by 2045. Just how will LA reach that milestone? We'll talk to Mayor Eric Garcetti about that and a future presidential run. Our exclusive conversation is next. This is Bloomberg. LA is looking for the right opportunity in the fight against climate change. This week, Mayor Eric Garcetti announced the creation of a new online portal to help cities get competitive prices on EV fleets and charging stations. The city also greenlit a fleet of electric scooters and is moving ahead with California's plan to get 100% renewable energy by 2045. We sat down with Mayor Garcetti for an exclusive interview at the Global Climate Action Summit here in San Francisco. Mayor Garcetti, thank you so much for joining us.
That's a pleasure.
Great to have you here. So I want to start by talking about what we're here to talk about today. Scientists warn that even if everybody fulfills the obligations they committed to in Paris, that we won't be able to stave off climate change. So what can a city like LA really do?
Well, we have to do everything. It's not an abstract problem to us. We have firefighters in Southern California who have died in historic fires caused by a historic drought. Mayor Sylvester Turner in Houston, my dear friend, is trying to rebuild a city. Mayors have to do everything, whether it's buildings, transportation, energy generation, and also enlist this is a cause for all people, not just for governments or for companies, but for every human being. And I feel a lot of excitement being here, actually. I know the problem has never been worse, but I think the excitement, the ease, the speed, and the cheapness of doing the solutions have never been this good.
What are some of the boldest commitments you're willing to make? I mean, would you support a halt on new oil wells in California?
Well, the boldest commitment is to be carbon neutral, which we've done in our city 2050. Now the governor has followed. There's no question we have to get not only coal-free, as we made a commitment in Los Angeles, but carbon-free. We have to completely change the way we move around. And we have oil wells. The third largest oil field in America is underneath Los Angeles. It's the only one with a city above it. And we have people who are dying of respiratory diseases, who have asthma. It's absolutely not the right place to be drilling, and we're looking at how we can shut those down in an urban environment where there's a huge health impact, especially in communities of color. But the more exciting piece is how do you generate jobs around the economy that will be a green and carbon neutral economy? In LA, we've 30,000 new jobs in the last 5 years since I've been mayor in the green sector. That's more than all the coal jobs we've lost and 60% of the remaining coal jobs in America. So whether it's oil and gas and Sylvester Turner doing that in Houston to move away to sustainable energy, or whether it's in LA where we really were built on oil, there's no question that's a chapter of the past, and now it's time to move forward.
I want to talk about scooters. We've seen Santa Monica come up with some fairly permissive regulation, whereas San Francisco has cracked down. In LA, they've been sent cease and desist letters, these scooter companies, and you see video of scooters on fire in the ocean. Who's going to be on the right side of history here?
I think they're great, but we have to find out the safest way and the best way to regulate them coming in. I'm the kind of mayor who doesn't say no, but who also says you don't know all the answers just because you're coming in with a disruptive technology. So we have an agreement right now. There's about 15,000 of them in the city of LA, more than anywhere else in the world. And we want to figure out a way to make this work because it does take people out of cars. But the emergency room visits, people who are on the streets in a very unsafe way, we have to make sure that people don't die from these or have intense injuries. But I love that Bird is based in Los Angeles, that we have Uber and Lyft and others now looking at joining that space, Lime. To me, it's really exciting. And if the same pace continues, there will be more electric scooter rides in a year and a half than we have Uber rides in Los Angeles.
Everybody wants to know about your presidential ambitions. You've been on the road, you've been to Ohio, Iowa, New Hampshire. Where's your head at right now?
Well, my presidential ambitions run through 2018, not personally, but I think for all of us. If we don't have a House that provides a balance of power, who cares about 2020? There won't be a cavalry coming. So I'm spending all my days raising money for our party, the state parties, and for great, talented candidates right now. After that's done, and hopefully the House is taken back, I'll take a couple months, make a final decision, and I think mayors really do have something unique to add to this conversation because we're dealing with practical problems. Washington has done one thing to unite us. It's not red and blue, it's not urban, rural, coastal, and heartland. It's really Washington and the rest of us, those of us who deal with real problems and they who don't in Washington.
So when are we going to see a decision from you about 2020?
Probably a couple months after the November elections.
All right.
One way or the other. But even if I don't run, I hope other mayors do, and I will very much be involved in 2020 because we got to get rid of this guy.
Our exclusive conversation there with LA Mayor Eric Garcetti at the Global Climate Action Summit. And that does it for this edition of Bloomberg Technology. Bloomberg TV is back there tomorrow in San Francisco. Do not miss our chat with former Secretary of State John Kerry on Bloomberg Markets. That's 1 p.m. Eastern, 10 a.m. Pacific. This is Bloomberg.